Intro. Hello and welcome to Profit Insights. I'm your host, Dusty, bringing you a calm and thoughtful take on the latest financial happenings. Whether you're on your morning commute or just enjoying a quiet moment, let's dive into the big stories shaping our economy. Market overview. So, let's talk about the market movements on this reflective Wednesday. U.S. equity markets, initially strong, took a dip due to some weak corporate results and renewed geopolitical jitters. We saw the S&P 500 down by 0.5%, the Dow sliding 0.7%, and the Nasdaq off by 0.9%. Small-cap stocks didn't fare well either, with the Russell 2000 dropping 1.5%. But despite this, the major indices are still holding up well for the week and the year overall. What caused this pullback? A mix of underwhelming earnings, escalating U.S.-China trade tensions, and the ongoing government shutdown. It's a complex medley, causing investors to be a bit on edge. Key financial stories. Now, let's turn our attention to some standout stock movements. Netflix had a rough day, suffering from a $619 million tax charge in Brazil, which put a dent in their Q3 profits. The stock plunged about 10%, shaking broader market sentiment. Texas Instruments also saw a decline, dropping 7.7% after providing weaker-than-expected guidance. It wasn't all gloom, though. Companies like Capital One and Intuitive Surgical managed to rise by 1.5% and 14% respectively on better-than-expected results. Netflix, despite its disappointing earnings, did highlight its best ad sales quarter ever, and they're looking to diversify with moves into live sports and gaming. This Brazilian tax issue seems to be a one-off, so they'll be hoping for a smoother ride ahead. Meanwhile, all eyes are on Tesla and Apple next in the reporting cycle, with investors especially keen on Tesla's automotive margins and China delivery figures. Investment tips. Looking over to commodities, crude oil prices rebounded due to supply risk concerns and optimism over trade talks. On the other hand, gold took a sharp dive, influenced by profit-taking and a stronger dollar. Bond markets also reacted with a shift toward treasuries, indicating fears of a slowing labor market. With the government shutdown still in effect, we've got a data blackout, challenging everyone from the Fed to everyday investors. Inflation remains a key watch, with economists predicting a modest rise in core CPI. A shaky labor market also has folks buzzing about the possibility of a Fed rate cut. Closing. As we wrap up, it's crucial to keep a balanced perspective. Markets are dynamic, swayed by a multitude of factors. So remember to stay informed and think long-term with your investments. Thanks for tuning in to Profit Insights. I'm Dusty, and remember, when the dust settles, only the truth remains. Until next time, take care and invest wisely.